Good evening, everyone. My name is Tatiana Chavanel, and I'd like to welcome you to the Jones Partners Thought Leadership event. I am a Rice alum, proud Rice alum, class 2009. I work for Phillips 66, and it is my pleasure and honor to serve as Jones Partners president. I see a lot of familiar faces, so you've been here more than once, and you probably know the mission and vision of our organization by heart. But for those who are new to our events, I'd like to quickly tell you what we entail and what we're all about. Before I do that, I always forget, but I'd like to make a plug for the organization. We have social media presence, Facebook and LinkedIn. So if you're not familiar, please find us, like us, share it with your friends and network. We want to get the word out there so that these events are even better attended and attract a lot of business representation from Houston, and of course, students, faculty. So that gets me to the next portion of the introduction. It is my pleasure to welcome our speakers, Lee Boothby and Dean Peter Rodriguez, as well as our corporate, individual members, faculty, students, and staff of Rice Business School. Without all of you here, these events would not be possible. The mission of Jones Partners is to open doors and build relationships between Jones School and the Houston business community. It sounds very abstract, right? How do we do this? We do this through continuous learning and thought leadership events like this, as well as smaller, more intimate roundtable events, where you have a chance to learn about a new research, as well as get to know people from your industry, or somebody from a new industry, broaden your horizons. We have over 50 corporate members and over 250 individual members. If you're not a member yet, I invite you to join. You see all corporate members popping up on the screen behind me. This would be extremely busy if we put all our individual members here, but you get the idea. I'd like to recognize Newfield Exploration Company for becoming our newest corporate member very recently. Thank you very much for doing that, and of course for speaking here. And I'd like to thank all our members for supporting us and continuing to renew your membership every year and sending your folks here for education and networking opportunities. So we've had a busy spring already, but there is more to come. Next week, there is a great roundtable series event, No Pain, No Gain, with AJ Kalra, March 8th. Hopefully you've heard about it and are planning to attend. At the end of March, we have a Thought Leadership Series event with Laura and John Arnold. They're co-chairs of Arnold Foundation. And then at the end of April, we will have pleasure of having Thomas Bacon, founding partner of Limestone Group and chairman of Houston Parks Board, speaking here as well. So pretty good agenda. Mark it on your calendars. Hope to see you here. So today, as I've mentioned, we will have Peter Rodriguez and Lee Boothby, chairman, president, and CEO of Newfield Exploration Company. And I'll introduce Peter. Peter Rodriguez is fairly new to the Jones School, but the impact he's making on the institution is very noticeable. He joined us from Darden School of Business at the University of Virginia less than 2 years ago. And I'll be very brief, as he asked me, but Peter is a native Texan. His education is from Texas A&M and from Princeton University. Yeah, you have some supporters here. So please help me welcome Dean Peter Rodriguez.
Well, thank you, everyone, and welcome to Rice University and welcome to the Jones Graduate School of Business. I'd just like to say one more word about the Jones Partners. I think it stands to reason, it's obvious to everyone, that for a business school to be effective and to get its graduates into a position to not only learn, but find great career starts, it has to be deeply connected to its corporate community and the business community. And Jones Partners has been really instrumental in making those connections for us. Without it, I don't think we'd be nearly as strong a business school as we are. Over the years, Jones Partners has contributed mightily to the progress of the Jones School, and we're extremely grateful for that. This evening, without further ado, I'd like to move us on to the portion where we get an opportunity to hear from one of our corporate leaders in Houston, learn a little bit more about their background, their views on what's happening in their field, and have some engaging questions with each of you. So I'd like to begin by telling you a little bit about Lee Boothby. First, just to say a little bit more about Newfield, actually I'll ask one. Would everyone who works at Newfield, would you raise your hand so we can see representatives in the audience? Thank you for being here this evening. Really appreciate you coming. I see that you've sort of padded the front row, Lee. So these folks, they're either going to offer you easy questions or very, very hard ones. And so we'll see how that goes. Newfield, I'm delighted to announce, has agreed to join the Dean's Corporate Partnership as our first chairman-level participant. This means that Newfield will be engaged with Rice Business all throughout the organization, from executive education to working with our corporate development office and others, and I think this is an exciting partnership for us, and certainly I'm pleased for it. And now I'd like to tell you a little bit about our guest of honor, our key speaker, and that's Lee Boothby. I'll start out by saying that Lee's a Rice MBA, so I'm pretty happy to have Rice back. And if we drop Rice MBA 6, 7, 12 times in the next few moments, you'll forgive me. But Lee, I'm going to tell you a little bit about the background and give you some of the formal description before you get to know him a little bit more in a few moments. So Lee Boothby was named chairman of Newfield Exploration Company in May 2010. Interesting time. He was previously named president, chief executive officer, and member of the company board of trustees in 2009. From 2007 to 2009, he served as senior vice president of acquisitions and business development, and from 2002 to 2007, he held the role of vice president for Mid-Continent. Lee was responsible for leading Newfield's early development of the Woodford Shale play in southeastern Oklahoma and other resource plays that have driven the region's significant growth. Earlier, from 1999 to 2001, Lee was managing director of Newfield Exploration Australia Limited and managed the company's operations in the Timor Sea from Perth, Australia. There's not a lot around Perth, Australia. It's a lovely place, but it's far from everywhere. Prior to joining Newfield in 1999, Lee worked for Cockerell Oil Corporation, British Gas, and Tenneco Oil Company. Lee serves on the board of directors of the American Petroleum Institute. He's a member of the board and past chairman of the American Exploration and Production Council and a member of the National Petroleum Council, where he serves on the Finance Committee. He's a past board member of the Independent Petroleum Association of America, America's Natural Gas Alliance, Oklahoma Independent Petroleum Association, and the Oklahoma Energy Resources Board. In 2015, Lee received the prestigious Chief Roughneck Award, honoring an individual whose lifetime achievements representing the highest ideals of the industry. He's also a member of the Louisiana State University Kraft and Hawkins Department of Petroleum Engineering Advisory Committee and the Rice University Jones Graduate School of Business Council of Overseers. He's a member of the Society for Petroleum Engineers, and he holds a degree in petroleum engineering from Louisiana State University and an MBA from Rice University. Please join me in offering a very warm welcome to Chairman Lee Boothby. So Lee, thanks. Make sure we're mic'd. Did I make the transition? Yeah, that's good, mic'd up. So we can start wherever you want, Lee, but I have some questions for you. 25 or 30 of them. This should be easy, like any exam at Rice University. But one of the things I thought about where we sort of share some interest, and we've had a number of dialogues since I joined 20 months ago, but a lot of them are around talent. We think a lot about talent at the Jones School and how we develop people for the jobs of the future. I have a nice sort of cynical way of talking to students at the beginning of each year. I say, to an organization, you're worth the size of the problem you can solve. Or something that sort of expresses that our job is to help you learn to solve tougher and tougher problems or to gain skills. But I never have an easy time telling people exactly, well, what do you learn in business school? Some people say, this is what constitutes business learning. Some people say it's something else. Some people think of it more as skill other than attributes of a leader. So what I wanted to ask you is that when you think about business acumen, what to you comprise as business acumen? What do you look for at Newfield? What are those things that make a big difference to you?
Sure. But I think one of the things that struck me fairly early on in my career is, I've always been blessed to work with bright, talented people. There's not a company around that doesn't want to hire the best and brightest, and most people are motivated by surrounding themselves with people that are better than they are so that the team wins. And and you come into the world, your DNA is not pre-programmed with a lot of these life experiences, and you find out that we know that we went to school, and we know that we wanted a job, and we thought we had an idea of what type of job that we might want and what type of company we might want to work for. But it's been my experience over the years, very few people do enough work, even business school graduates, in terms of thinking about some of those dimensions and understanding, a company's history, leadership, dynamics of the industry that you're going to join, et cetera. So one of the initiatives that we've been working on, is a great question, is we're trying to work today together to raise the business acumen of our entire organization. Because I remember many times as a young engineer before I came to business school, I had no idea where the money came from. I just wanted my projects approved. And when you get out in the real world and go to business school and you get these jobs where you're on the front lines and now you understand where the money comes from, and it's an investment and it has expectations of returns and all the things that come with it, you think back to how much better people might be able to perform in their roles if they just had a basic understanding of business. So companies have to zig and zag, and there's an ebb and flow in the markets, and in our business, the commodity cycles, dominate. There's just no way around it. And I think the better everyone in the organization understands that you're a business, you exist to earn a profit, you want to be good corporate citizens, right? There's a social license to operate, as we say in our segment, and you're engaged in a way to share take real questions and give real answers to the people that you work with and the people under your charge. It just creates a much better environment for everybody. And then on those days when you've been leaning hard left, and you decide it's time to tack right, everybody goes, yep, I got it. We've been here before and we know where we're going. And so a lot of aspects, I don't think anybody comes pre-programmed, but I think it has a lot to do with communication, sharing, helping educate people in terms of how the business works. We're an independent E&P company, so it's reasonably easy to explain what it is that we do and how we make money. But it's an investment that pays dividends, because the better prepared people are to understand the dynamics that affect the business, the better performance of the team, the business is going to be on the road ahead. So I would say we still, in my judgment, have work to do there, but it's something that we're working very hard on today to try to raise that business acumen of the team. And that's from the receptionist to my office, because by God, we all have things to learn. I was telling Peter earlier today, and some of my classmates were nice enough to be here this evening and seen each other in some time. So thank you for coming, and we all agreed that we're getting old. I think that 3.5 decades will do that to you. But I remember at 27, which Peter tells me is still about the...
That's average age of the class usually.
Average age of the class. I'll fess up and say it's about the time that I showed up here. And I remember hanging around with a few of my buddies, and we were convinced, absolutely convinced, that we were all learned up. There was nothing left for us to learn.
You're right, too. That's what all the...
And I'm just going to tell you that if you've ever gotten to that stage, those of you that are still on that end of the distribution, it's a lifelong journey. And I look back and chuckle every day about the conversations we had, so convinced that we knew it all. And the reality was that, there was still much more to learn than we could even imagine. And I think that that's an important lesson to take away as well. And there's one other thing you said that I'm thinking about it. I'll try to spit it out here. When you take that in context with interactions with people, it comes back to honest dialogue, authentic dialogue, right? If you're honest and authentic, you will win. And I've told our people from day one, think big, be big. Dream big, win big. If you spend time thinking small, you spend time thinking about the chatter at the coffee bar, you spend time Monday morning quarterbacking decisions that were made rather than trying to ask why was this decision made so that you can better, plug yourself in on how to compete and win in the world. You're part of the problem, not the solution. Be part of the solution every day.
So this is about the way you run the organization, and so it sounds like your advice is in part to keep everybody well informed about what the business problems are, what the ambitions are, disseminate knowledge broadly. I assume that means that you have a lot of contact with people throughout the organization. Or?
I would say we have pretty open, honest dialogue at all levels. And
is
James? Sometimes too honest, right?
Is that different than it was when you entered the industry?
Yes, that's a great question. So I'll fess up. I am a baby boomer, right? I guess this is where we start. So I'm a baby boomer. I'll just go ahead and finally own up to it. Now I'm at the tail end of the baby boomer, so I can still tell myself I'm one of the young ones. But I remember when we came into our industry, there wasn't a tender loving care society, right? You got hired, you competed for the job, and, magically, I went to work for Tenneco, which was a Houston-based company at the time, big conglomerate. And there was a 1-year period that everybody was, technically, I guess, on a test drive.
Right. Yeah.
And on day 366, it's 367, I guess, if it was leap year, some people would just magically disappear. They'd go somewhere, they'd never come back. Right? But the people you had...
farm upstate, I think is the...
Yeah, the people that you had left, they were pretty talented. But I'd liken it to this. As new graduates coming into the industry that I've spent my career in, the senior managers, imagine that they were, standing around a pool. And all of us, young new hires were dressed in swimming attire and sitting around the edge of the pool on the walls. And they would walk over to the edge of the, from the edge of the pool, grab one of us by the scruff of the neck, they'd walk over and toss us in the pool. And then they'd watch to see if you could, paddle around and make it to the edge. And, if the first one, paddled around for a little while and didn't make it out, there wasn't a lot of mourning that went on. They just went over and grabbed the next one, threw him in. And when that one got to the side of the pool and crawled out, he or she is a keeper. And, I couldn't imagine back then walking into, particularly a senior manager in a company's office, asking a question, having a conversation, or I told Peter earlier, asking for advice, for God's sake, right? That was like a sign of weakness. It's also the most foolish perspective you could ever have. So I think one of the really cool things, and I credit, I'll credit Gen X, and I'll credit the millennials, and I'll credit time and experience for all of this, is the pendulum swung to the other end of the spectrum today. And those that have experience want to share, right? Organizations that function the way that they should. Information's a need to share, not a need to know. It's not guarded and protected. You share so you can educate and people can be part of the solution. But for people coming into the business today, you've got to be willing to go find the gray hairs and acknowledge before you get there that you're not all right and they're not all wrong, and vice versa. Because everybody joins an organization that's a distribution of people of all ages and experiences. And, the magic is getting those groups to work together as a team rather than seeing everybody on boundaries, on generations and perspectives. And I think that's something you have to work at each and every day. But Peter, I think that we've come light years from the way it was 30 years ago.
No,
and I think that's a really good thing.
No, it sounds like it changes, and all around in society, I guess that's true, because you have a lot of communication within your organization, top to bottom, and information is so broadly available. I like to say we're in this instant economy where everybody knows everything almost all the time, or information is broadly shared, which also puts pressure on public companies versus private companies. So I thought I would ask you, so what's it like, a public company CEO in this sort of market and this time for this industry versus, say, a private company? What has that challenge been like for you?
Preface to this industry, because I think the first thing would be that if you're a public company CEO today, you'd rather be in almost any other industry. because, you know, all of those folks are high-fiving. It doesn't matter what happens one day to the next, you know, it's just up. And, yeah, I would say that our sector, you know, we've been through a lot. You know, companies and teams of employees that worked for the various companies. You know, came out of the financial crisis, and most independent E&Ps had too much debt and the wrong commodity, going into what was going to become an oil-favored world. And most companies here in the U.S. were natural gas favored. We were no different than that. We had a global diversified strategy. The only problem with that is we executed that for about 10 years. And at the end of that, punctuated by the financial crisis, we realized we were about $30 billion too small to have enough diversity in that portfolio to live. So we had all kinds of reasons to need to change. But, you know, so we took 3 years to kind of shift the strategy, you know, the company and the portfolio and the skill sets in the direction it needed to go to embrace the future, which unconventional resources. And that happened initially in our industry, in our company as well, in natural gas and, you know, commodity supply-demand rules. We discovered more than anybody thought was there. We became very good. Our friends in the service sector, you know, friends in the upstream sector, the talented workforce that we had coming into this period, you know, did things that most people thought were impossible. And I think to this day, it's one of the greatest gifts of certainly our lifetime, probably the last 100 years, and it's one of the greatest gifts that's misunderstood by the average citizen and most of the people on Wall Street in terms of what it can do for the economy and what it can do for people's lifestyles and lives and lifting up the poor, and I could go on and on and on. But we had that phase that we went through, and then the next phase was to go and assess, you know, the ideas that we had as we shifted our portfolio towards oil. And then the final phase, as we got ready to harvest the work in the oil, was the commodity decided to readjust from $90 to $100 to about 40. And there aren't a lot of businesses that, you know, can quickly adjust to that kind of change in the revenue stream, et cetera. And I think OPEC miscalculated in many respects the resiliency of the North American business and the teams, the talent across that spectrum, upstream, service, downstream. And I think everybody rose to the occasion because, frankly, it was about survival. We entered 2015, first employee meeting that year was with oil below 50, it is about survival. Mm-hmm. And that was the mode that we operated in. And it caused us to consolidate, you know, regional offices back into Houston, downsize the organization, you know, reduce capital budget and focus on...
Sounds like a lot of transformation at once.
A lot. So I think when you look at that, that's 9 years in 3-year segments. I woke up this morning thinking about coming down here and going, what's the next 3 years hold, right? So to answer your question about public company CEO and in this business, this is our 30th year as a company. Newfield started as a small $9 million investment, private equity in a day when private equity didn't have money sloshing around in the trough like it has the last 10 years. $9 million. We spend that on every well that we drill today. $9 million. $3 million put up by the employees in 1988, November of 1988. What a time to decide to start an oil and gas company, right? But they did, and they were intrepid souls, and you know, they set a course and ultimately built a successful company. Now, that company was built in the Gulf of Mexico. Mm-hmm. First decade was in the Gulf of Mexico. Second decade, once they realized the Gulf of Mexico wasn't going to feed the company's growth aspirations, was that global diversified model that we talked about, and we call that the diversification decade. And I'd say the third decade, which finishes this year, it's going to be called the transformation decade, because we've transformed almost everything there is about the company. Today, we have the strongest 3-year outlook that we've ever had in the company's history. When we announced that on last week, the shares were down. We've got double-digit growth in production, cash flow, EBITDA, all the things that you look at your models and business goal, you go, my goodness, man, this is a rocket ship, right? But today, these investors, that made bets on a different commodity in a different world and a different thesis that hasn't developed and are frustrated by their buddies up and down the hall high-fiving every day at the returns that they're generating. Well, all they want to know is how do they get their money back. So it's really interesting, fun conversations that we have these days with our investors and our owners. And I think boards and CEOs are going to be tested. You know, what are you about? Are you about today, tomorrow, and the future, and that business plan that you're going to execute that is the best value proposition for the shareholders, mythical as they might be, from short to long? Long is about 3 years. Short's in and out today. You know, it's a challenge. And so I'd say it's an odd place to be, because I think the industry is in a magical place. The portfolios of the companies have never been healthier. The talent pool in the sector has probably never been better. And the headwinds in terms of the investor sentiment are strong.
So how do you think this period resolves then? You've got this sort of challenge to explain the industry to Wall Street. You have these pressures that are coming from a market that just defies gravity year after year. How do you think this resolves? Is it acquisitions? Is it M&A? Is it going to
Well, I keep a paperweight on my desk, and I'm looking at all my friends from Newfield here. Everybody that's been in my office knows this is true. I've had it on my desk since shortly after I left Rice. And it was a paperweight that my wife purchased when she was out on a shopping excursion with our kids. And they asked, what did it say? Because they couldn't yet read. And she read it, and it says, do the right thing. And they said, that sounds like Dad. She bought it, and it's been on my desk every day since. So first and foremost, you know, the CEOs, the leadership team, the companies, and the boards have got to be all in on what they believe the right thing is. And if you're committed to the right thing, and you've got the right team and talent, you'll win. But there are times when you are going to be out of favor in that regard, and those times are tough. I think it's a folly to chase the whims of the market, because whatever they think today, they'll change their mind tomorrow. And at some point, if you're always chasing, you know, whatever that fleeting wind is, you'll have no compass, you'll have no direction, and you'll have no conviction. So, you know, you put your head down, you do the right thing, you execute, right? You go out and you look at your operating teams and say, I did it, you know, day before yesterday. I looked at all of our operating teams and all in one room, and I stood up and said, well, we're in one of those times where we've got to go prove all the doubters wrong again, because that's what we do. And you just got to take it on, take the challenge on, go make it happen.
That's great. So when you look back on that period of all these transformations, you mentioned the three, and thinking of the next three, do you have any one or two lessons learned, big reflections you have over the whole?
Well, the first thing, if you're a publicly traded company, never get yourself in a situation where you have to execute a strategic transformation.
Okay. So that sounds tough, but all right.
Because it's fraught with peril, and you're not likely to survive. The second thing I would tell you is be honest, introspective personally, and then collectively with circumstances. I mean, we lived in a time, that earlier time that you talked about, the world didn't move as fast. Things were generally, you know, done in a certain way. Things didn't change as fast as they do today. And there wasn't the need, the absolute imperative to be able to adjust real time, right? Left, right, you know. And I think the pace is just getting quicker and quicker, and that's one of the reasons why the business acumen comment is so important. You know, what's the business environment going to be like 5, 10 years from now? It's going to be faster, it's going to be more complicated, it's going to be more competitive, and it's going to require better talent. And that's all part of that. The other thing I would say, if you're in a commodity business like we are, you know, we and most of the companies in the U.S. didn't end up with natural gas weighted portfolios by accident. In the conventional world, that was about all you could find and produce and make any money with. And you know, we spent most of our careers, the first 20, 25 years, everybody convinced we're running out, right? Hell, peak oil is pretty comical. That was supposed to be what occurred back in 1970. Last month, we passed that number, at 10.2 million barrels a day here in the U.S., and we're on our way to 11 by year end. Who saw it? Who forecasted it? Who dreamed? Who imagined that could happen? Almost nobody. The talent of that workforce, the surviving workforce for that tough period, that 15 years we're talking about, across all segments of our industry, they were the difference makers. Everybody wants to credit technology, everybody wants to credit, well, price. You had to have the price environment to tinker, true. You had to have technology to be able to apply it, but you actually had to have people willing to take the risk of going out and trying something that's never been done, and the audacity to dream and believe you could make it happen. That's cool. And that's what our business, the whole segment, has done. I'm proud that we've been part of it. And whatever business you go into, don't be afraid. Do not be afraid to step up and take that challenge, because every business is going to have a challenge like that. And don't let the person to the left and right of you tell you that it's impossible. You can't do it. The cynic never wins.
That's an exciting sort of way to describe what's happened in the face of very low commodity prices, rapid change in the industry, sort of staring OPEC in the face is sort of the narrative there, and being able to survive. And that's important narrative for people at the school. I deal with a workforce here, a lot of millennials. It's almost all what we have are millennials, and they're changing the world in a lot of ways. But they want different things out of work, it seems, than prior generations have had. I think they're very interested in self-determination, having causes along with their work that bring them passion, working collaboratively. And so getting them to think about this industry is a challenge you must face as well. It's, to overgeneralize, it's great to go to Silicon Valley. It's great to work at a tech company or to have a newest, latest, greatest app or small entrepreneurial venture. And that can be a challenge. Sure. For a local industry like yours to say, actually, there's a lot of excitement and opportunity here. We need a lot of skills and tech. How do you deal with that?
Well, I would say that the first thing you do is you look back at history, and that same history of the commodity cycle impacted, enrollments in what we call petrotechnical disciplines that feed our industry. So the scientists and engineers that we need on the front lines. It's always had the wrong description in the media and the political and
the industry has had
the industry has, general society. It's always been a high-tech business, right? And the technology that gets applied in the business is not well understood, but it's a high-tech business, not a low-tech business. So the first thing you got to do is reframe the opportunity in that regard. And then, what our people do is vital to the economy, standard of living, right? Worldwide, right? I remember, when I was a student, before I became a college student, and, then I became an undergraduate student. Hell, it wasn't so long ago that the world wasn't supposed to be able to support 3.5 billion people. Now we've got 2x that and going to another number. Where does that come from? I wish that we had more honest dialogue instead of this political rhetoric that warps people's minds. Because the fact of the matter is, we need every environmentally sound, economically competitive energy source that we can drive into the economy, period. And we shouldn't fool ourselves. And those that are good at math can sit down and do the calculations. I joked about peak oil because I thought that was a tired story, since our people come to work every day to prove that wrong. The industry proved them wrong. Today, everybody wants to talk about peak demand. Almost nobody explains to people where electricity comes from. And, it's a detail, right? You don't go find electricity, it's got to be created. And, these technologies are very promising, but you don't take 100 million barrels of oil demand out of the world's supply and go to zero overnight. It's not going to happen. I wish, back in the time I was here in business school, the Kyoto Treaty, for those of you that might have read or heard about that back when. The U.S. never ratified it. The truth of the matter is, I think only the economic powerhouse, Romania, was the only European country that had actually ratified it, but everybody stood up and pontificated about it. Here in Houston, Michael Economides, who was at the University of Houston at the time, wrote a book, and I think it was called The Color of Money, and it was about oil. And he, as an economist, went in and had never studied energy. And there's a graph in there that I thought was just amazing, because he correlated, standard of living to economic use in the economy. And if our politicians had come back here to the U.S. and went over and negotiated that treaty and said that what our folks just agreed to over in Japan, if we ratify this, is that we're going to move from this standard of living to the standard of living of Pakistan, I'm pretty sure people would stand up and say, I don't think I'm going to sign up for that. And I challenge those of you in academia to try to at least force yourselves to have a balanced argument in that regard. Because not understanding the issues and not getting the people that are really experts in the topic in question involved is a mistake. If you wanted somebody to go design the next computer, don't call me, okay? I've spent too much time doing what I do, but just know that people in our industry, there's a patriotic side to what they do. They work hard. It's amazing what they've accomplished. And the economic and financial benefits to our nation and the world, that benefit is yet to be seen in full force. And we should embrace it. It is a super highway to the future. Oh, solar, wind, and all the rest of that stuff, if you're competitive, economic, the next idea that somebody has, great, I'm all for it. I'm all for anything that can compete economically. And that's what we ought to be pushing. And I think in the end of the day, let the market decide. I don't know if that was in your question, Peter, but I just wanted to get that out.
My question was so good. I anticipated that follow-up,
Okay.
millennials. No,
So my story there with millennials, I think I've seen a lot of CEOs duck having honest conversations with millennials because they're afraid to have them. I'm not afraid to talk to millennials. I've got millennial children. They're young adults now. We've hired aggressively for the last several years to reform the composition of our workforce. 40% of our workforce today is millennials. I'm proud of the fact that that's ahead of the industry average. 40% is Gen X, and we're the decline curve. That's us, the baby boomers, right? I think if you're honest and you frame things up in a way that can appeal to people intellectually, right? Appeal to them in a way to say, we're doing good, right? And turn that on for people to go ahead and say, hey, I get it. There's plenty here to appeal to everybody. You can have positive impact in the communities where you live and work, the states, where you reside, where the energy production takes place, where the energy is delivered to raise the standard of living and provide all kinds of materials, goods, and services that people take for granted. It's not hard, but you have to have an honest dialogue. And it's not for everybody. Those that want to go to Silicon Valley and that's their calling, God bless them. We need people in Silicon Valley and places like that. But we need people doing what our people do every day, too. And I don't think they get enough credit for all the good work they do. It's amazing. If you understood how complex the various operations are that need to be conducted to deliver something that we can all take for granted at a cost that is just absolutely amazing and frankly was unfathomable before this unconventional revolution, right? Unfathomable. You have to step back and go, wow, I should probably spend a little bit more time thinking about that. In a place like Houston, there's no excuse for any of us here not to be educated. But we have a responsibility to educate people in other areas. And I think I never miss the opportunity to have that conversation.
So you've described an industry and an organization that's dealing with some complex topics, that's undergoing a lot of challenge, and you've got 40% millennials in your organization. How do you take that group and the Gen Xers and others and get them ready to take on bigger roles? How do you develop someone into a leader that's suitable for your industry, your company?
Well, you made note that we've signed up at Rice.
That's good. Now,
right?
Step one.
The first, Rice earned that. Let me go ahead and brag on Rice a little bit in the Jones School here. When we were about to turn 25 as an organization, we woke up one day and realized that our founder, a wonderful gentleman named Joe Foster, a luminary in the energy business, when he wrote our founding business principles on a yellow tablet, he was famous for writing on yellow tablets, always writing on yellow tablets,
yeah.
right? And we went on for 25 years, the first quarter century, with founding business principles. I never took the step to say what's a mission, vision, values for the company. So as we approach the 25th anniversary, we picked 100 people, or about 1,000 person workforce. We picked 100 people and split them into 3 groups, and they were all different ages, years of experience, disciplines. Each one of those groups was a microcosm of the organization as a whole. And working with Rice, they came down, they spent a couple of days at Rice, each group, so that they could get a little bit of a feel for what a business school type education might feel like. Because we have wonderful scientists and engineers. Hell, I think I was a pretty good engineer back in the day. I'm kind of rusty now, but you know, there were some dimensions that I picked up in business school that I might have picked up in the School of Hard Knocks that turned some lights on for me that, you know, a lot of really, really bright people have just not had the opportunity. So the first thing we thought is, we'll use this to get some exposure to business school, because in our industry, historically, and turn the clock back 20, 30 years ago, most of the senior leaders, if a young professional came in and said, I'm thinking about, you know, pursuing a business education, I'd like to go get an MBA, what do you think about that? They'd say, well, look at me, I don't have one, why would you need one, right? I mean, those are the conversations that took place. Well, I'm successful, why would you think that that's going to do anything for you? And they tell them all the reasons why it didn't matter. What's changing today is, I think, as we get more and more MBAs into the business and companies across the spectrum, and people see what they're able to do and the capabilities and how they process information, and it comes down to the folks that come in have to earn their way. And by earning their way, they open the door for the next person behind them. And I think back to the millennials, that's part of it. We've hired a bunch of them. Mm-hmm. You know whose job it is today to go get the next group in? Not mine, theirs. Mm-hmm. And everybody's told the same thing. We want to put the best team on the field. You want to hire the best talent. And we all have academic affiliations. We say that, you know, once you've entered the workforce, you know, save that for, if you're a football fan, you know, college football in the fall, or basketball, or baseball, or whatever else you want to cheer for, that's great. But once you join your company, whatever it happens to be, that's your team. And all of that other stuff becomes secondary. And I think that's got to be part of the dynamic that you realize here. So we started with this. Rice helped us. It was, you know, really, I remember when Brett Smith and the team came up and met with me the day before they kicked this off. They said, so you want to go ahead and pull these groups together and do some stakeholder maps and work on mission, vision, values. And there were 3 different groups over, you know, a few weeks. And then they all got together here again at Rice at the end of that and compiled it into this document, mission, vision, values. It wasn't written by a bunch of high-paid consultants or the senior leadership locked in a conference room for a few days. It was written by that team and the professors that helped them here at Rice. Pretty cool. What was Brent afraid of that day? He said, well, I don't know if he was afraid of anything, but I think he was trying to tell me I should be afraid. Mm-hmm. He was wondering, what are you going to do if they come back with something really crazy and, you know, that you might not like? I said, well, you know, Brent, if we challenge our people, what do they want the next 25 years to be about? And how do they want to think about what it is that we do together and why we do it? I'm going to put my vote with the people. They're going to land, our people are going to land on the right answer. I'm proud of what they did. The CEO added 1 word on here. I'm really proud to say that too. So my Rice MBA.
That's good.
You know, there's one thing on this that the CEO added. So all the bright professors at Rice at the time that helped, and all of the bright people we sent down here to work on it, for some reason they left the word adaptability out. That's the one I added. And if there's anything our team's proved in the 5 years since this is published, is they're able to adapt to changing conditions. But it's a cool story. And I think that opened the eyes for a broad cross-section of our team that most of which didn't have business training, to say, well, that was a really cool experience.
That's great.
And then subsequent to that, we've had a number of other opportunities to engage, and we've had people come for some of the executive training, and we've got a lot of MBAs now that work for the company. You know, and I think, again, credit to them, And credit to the Rice program. When we started that, I think we were recruiting at 3 different schools here in Texas. And we quickly decided that we liked the Rice MBAs best. And that's kind of where we've been since. I was really proud of that conclusion, but I want you to know that was not a top-down driven decision. That was our people and the graduates that came in that won that out. And I think this is a natural extension for us. And today, we've got leadership development programs that our HR team has built and refined. Every young professional that comes in, no matter what their background, goes through something we call boot camp. And I'm sure if most of you, maybe many of you have those programs. If you don't, I'd strongly suggest, our folks would be happy to share their experiences, but we realize that, as smart and bright as the best talent that in the business could be that we're hiring, a lot of people don't have some of the skills that are going to be really helpful to them early in their career. So we actually invest time there, and they do it together. So they've kind of like got a cohort group that they work through. That's been very successful. We've got a well-developed leadership development program. We were careful to not call that a HIPO.
High potential.
Right? Because, why did you get in and I'm not there?
LOPO is not a good name.
Right? So we call it Leadership Development Program, and we frankly expect everybody to go through that program. And it's been amazing because many of the people that go through this program haven't been to business school. And one of the assignments that they do, we've had 3 cycles now, right? Getting ready for the 4th one, is they have to analyze companies, right? They do case studies. They have to analyze some companies in our business, and they have to assess strategy, direction, et cetera. And it is amazing, the work product that they come out with. Just absolutely amazing. So I'm excited about that, and there's probably other iterations that we have to go through. But we believe Rice can help us accelerate, that training and development for our high potential folks, and we try to have honest conversations with people. And when you get out, and for those of you that have technical backgrounds, you might appreciate this. And those of us that have enough years really appreciate it. Our life is not a flow chart, right? Your career is not a flow chart. I mean, I'm not suggesting that you shouldn't kind of paper doll it out and kind of imagine what's out there, but I am suggesting that if you get yourself set in that way, you're going to miss some real quality opportunities and experiences in your life. And, it's just not the way to approach things. So I think what we hope for is that by broadening the awareness as that group grows, right, and everybody's in a need to share basis, when you guys are, putting out a good experience, and we just had one of our up-and-coming exploration managers attend a 2-week school, I think it was, and got back to the office, and I had to go hunt him down and find out, what it was that he had heard about, because I was hearing from other people about what the wonderful experience was that he had here. So that's a good check mark. And I just encourage folks, if you can, in your organizations, if you don't have that going on, support it. We're very open and honest. I've got people here that have chosen to, come back and go to school and get MBAs. We always hope they come to Rice because it's a lot easier for us to keep them on our team. But I'm not afraid to have people that are looking for that go off and attend another school, and we're happy to compete, and hopefully they'll come back and be part of the leadership. But we believe those skills are necessary in the road ahead. Period.
So a lot of development in that way. Before we move to questioning, I have 2 questions for you. I think they're simple and straightforward. They're kind of standard at a business school, but one would be from your Rice education. If you look back on it, is there any one thing that stands out as giving you the most value, or the class that you reflect on that added the most value to your career post MBA?
Well, I think I'm gonna cheat. I'm gonna go ahead and give 2. I think I want to give a lot of credit to my classmates. I think you come here and I don't think very many of us knew one another, and you don't get through a business school education without having a strong group of folks around you to help you get through those projects, and those are special memories. So I think that experience stands out above all. But as far as something that I got out of business school that has been the most valuable thing in my toolkit by far It was something that I didn't even, as an engineer, didn't even know existed. Would have thought at the time that why would I need anything that I might call touchy-feely? And I might even put BS on the back end of that at the time. I'm a little softer form of myself now, but you know, organizational behavior theory. I mean, I remember getting the course assignment, and you know, there were going to be 3 semesters, and I told myself how much I was going to hate this. I mean, my God, you know, with all the other stuff we got going on, we got to do this too. And I think I fought it mentally for, you know, 4 or 5 weeks into that semester, and then the light bulb went off. It's like all of a sudden, the things that were being described in the class, I could relate to experiences that I'd had. Mm-hmm. And from then on, I was like switched on. You know, it's like hungry for this. You know, give me more. I had no idea when I left here that was going to be what I'd tell you over a quarter century later, the most valuable tool in the toolkit. But the assignments I've had, the jobs I've had, you know, since I left here, by far, not even a close second, that's been the most helpful. And I wouldn't have gotten it had I not come to business school.
That's a great piece of advice, and I think that we experience that a lot. Those classes don't always hit people as the most valuable, but how people work, how organizations work, I'm sure that's what you deal with every day. Last question, it's just the standard one, which would be if you had any advice for a current student, one suggestion, one thing to tell them, what would you say to today?
Well, I hope, and I'm sure you guys didn't get here by accident. You know, it's a wonderfully talented class. I mean, it's amazing, you know, the talent pool, the diversity, where people come from, what they've done, what they dream of. But, you know, never be afraid. Never, ever, ever be afraid to dream big, right? Think big, dream big, win big. I think it's been good to me. You'll have occasions when, you know, people will talk with absolute conviction about all the reasons why this crazy idea that you have is the dumbest thing they've ever heard. Mm-hmm. The magic is to figure out who you should listen to and who you should ignore, right? And I think that if you pay more attention to the people that are right more than they're wrong, and less attention to the people that are wrong more than they're right, those are usually the ones doing the Monday morning quarterbacking around the coffee bar, that you'll soak up that experience a lot faster, and you'll go farther faster than the people that are playing that other game will ever imagine. So I think that, you know, that's important. You've got to reach out. Go back to something I said earlier. You know, reach out. You know, don't just rely on the electronic devices. I've got them too, but I'm so sick of having the electronic leash. I dropped it in my bag there. I've now got to carry it because of the world we live in today. A business phone and a private phone. We moved away from that, but with all the hacking now, I've got to have a private iPad and a business iPad and more devices to carry. I don't even want to think about it, right? So not everybody is clued up. This is back to the generational thing. I'd rather have a conversation, right? I'd rather somebody pick the phone up and call me. Remember that not everybody operates in the same channels that you do, and you need to be able to operate across those other channels to really be successful. Too many people want the world to work the way they think it should work. And listen carefully to this. The world does not work the way that it should. It works the way that it does. And you may not be able to fight all of those forces. That's true with markets as well, by the way. That's a subset of the world. And I think that's probably best advice I could give.
That's great stuff. Listen, we have a little time for questions. If you will raise your hand and we'll bring a microphone around to you. It's certainly easier to hear you when you have a question if you talk into the mic. So if we could have one of our mic runners. We have a question up in the back and down here. So if someone, mic runner. The acoustics in the room aren't bad, but that's far enough that we're not going to be able to hear. And then we'll have a second one down.
Oh, that's the other thing. As a young engineer, I should have worn more hearing protection. I shouldn't have played music so loud. I shouldn't have shot so many firearms without hearing protection. And today I wear hearing aids. So,
Judy Allen, this was a very inspirational conversation about leadership. But could you spend a little time sharing with us your view of the energy industry, meaning I've been to several energy conferences lately where the really gurus, now you can counter, say that oil is going to go to $70 a barrel within the next 5 months because supply and demand really aren't maybe the way that things are being reported. Then the second question is, what kind of budgeting, within your industry where you have to think so far ahead, are you using in making your budgets? I mean, do you use $50 a barrel? Do you use 60? Do you use 70? And same for gas. And then could you talk to us a little bit about the future of the oil industry vis-a-vis electric cars, geothermal, et cetera? Just share your general, as a CEO, how do you look at this?
Okay, well, there's a lot in there, so I'll
I
try
know.
to. If I forget any of it, give me a chance, because I mentioned I am aging, so I might forget part of it. First and foremost, so as far as the current macro, our view has been since the commodity slide in late 14 that we can't come to work and run our business on what we think OPEC's going to do. Frankly, when that slide started, OPEC hadn't even made their move. They made their move in Thanksgiving of that year. Thankfully, we thought that this was coming that summer, and we hedged. So when the bottom fell out of commodity price, we had a hedge book that was worth over $1 billion, and that's what allowed us to navigate from the $90 to $100 world to a completely different business and structure and focus 2 years later.
What information did you use to give you that insight?
Well, we read a lot, we debate a lot. My CFO, doesn't matter what I think on a particular day or what he thinks, we'll always have the opposite side of the argument. And I think one of the mistakes people make in commodity businesses, and I've seen a lot of companies make it, is our teams are so smart and so talented, right? And what do smart, talented people want to do? They want to be right. You have to accept there are things that you can micrometer a brick on and be pretty good, and there are things that you need to recognize that the uncertainty bandwidth is wide, and you've got to plan a wider bandwidth than many people want to allow themselves to do. It's easy to test the upside on prices because that's gravy and it's going to be fun, and you will have different issues, but those are all easy issues to deal with. The painful part is when you've got to test lower commodity prices that really stress the organization. And the debt and equity markets, the same folks that today want their money back, there were a bunch of companies in our sector that didn't see that coming, didn't change what they were doing, and they were on the road to bankruptcy. And there were a lot of bankruptcies, but what happened is they didn't actually really disappear. The assets don't disappear, but they should have changed hands. The worst thing of all happened, the companies that went into bankruptcy kept the same management teams that ran them into bankruptcy. They came out the other side, and now their balance sheet's clean. And what are those guys that ran that company in there? What do they know? They forgot how they got there, and tomorrow's going to be better than yesterday, and they do the same thing they've always been doing. That's a problem. So you need bright, talented people around, and we've got a whole team of these people we call our corporate development team to do all of this work and test the boundaries and really test the boundaries of what could happen, and what we need to be planning for. So that's the first thing. As far as the macro, our view has been that there's a fight on right now. And you know that OPEC has taken 1.5 million, 2 million barrels a day out of the market. So that's available to come on, plus whatever other excess capacity they might have that they haven't advertised, whenever they choose. So, the oil markets are, razor thin. We've had really high inventories here across the world, but in the U.S., those are being drawn down now, and we're exporting some 2 million barrels a day into the world market. So Cushing's at about half the level that it was a year ago, if you hear about Cushing. Our industry, particularly the independent E&Ps, they've got a history of, it's true on the service side too. So this commodity cycles got some nasty parts to it. You know, what we all should learn to do is live in this world, but we've always lived in this world, right? And I call it the farmer mentality. And farmers know that when the sun shines, you make hay. And when the sun's shining on the service guys, they make hay by raising the prices. You know, we bitch about it. When the sun's shining on our side of the business, we make hay by remembering how they treated us when the sun was shining on them, right? It's been going on forever, but I've experienced it for 35 years. My fervent hope is that we can find a better place for all of us to live together. We based our plan last year on $50. We went out with that a year ago, and the market like puked because everybody was talking about $65, $70 plus before the end of last year, right? We built our plan on 50. The average price last year was 51. I think our team did a pretty good job. But you know what? It is a thankless thing when the sentiment is negative, right? That's yesterday, that's behind you, and move on. But what did that mean for us? We planned a conservative investment profile. We were able to preserve strength on the balance sheet. We preserved cash on the balance sheet. And we lived to fight, another day. So this year, we're more buoyant because you can see the inventory is being drawn down. Industry is generally holding the line on behavior because investors have said, hey, we're not going to continue to fund that deficit funding that you guys have done for the last 4 decades, right? When the world was running out of oil and gas and we weren't awash in it, the markets were always there. Whatever the bad behavior was, it was forgotten. They'd give you debt, they'd give you equity. This is a positive of public, by the way, versus private. Sure. Phone call and $1 billion shows up, right? It's crazy. And that's how it was for a long, long time. But today's resource base is different. We've got depth and quality and visibility for multi-years into the future. And that's the industry. So really it comes down to discipline and behavior. Our management team is going to be disciplined. Are they going to work to maintain a trajectory that's sustainable? Or are we going to oversupply the markets? So the debate today, in my mind, is will supply trump demand? And is the demand side of this real, with all the global activity? It seems like there are a lot of signs pointing to the answer to that be yes. So the people that are thinking $65, $70 plus oil sometime later this year, going into next year, they're betting that demand's going to trump supply. And if it does, that's what will happen. If supply trumps demand, here we go again, right? So we've got a pretty rigorous hedging program. Since 2009, our team is net $3.5 billion to the positive on our hedge book. And how did we make the decision back in the summer of 2014 to hedge? I spent a week and a half in Europe, and everywhere we went, I had never seen more negative sentiment in my life. There was nobody positive on anything. I left the U.S. and everybody's positive. I go to Europe and everybody's negative. Came back that September, the first week in September of that year, and we pulled our little hedge committee together, which is me, the CFO, risk manager, and marketing manager, and we started strengthening our hedge book. And that's where the $1 billion cushion came from. So we were fortunate that we moved early, but we moved on just a feeling. So we plan with wide band swings in the commodity with special emphasis to the downside, and we make it painful. We go farther to the downside than we hope that we're ever going to experience, and that keeps you honest. And you have to adjust your game plan accordingly. So the worst thing you can do in our business is to have too much activity in a falling commodity and stick with it, because then you wake up upside down. If I miss it, and the right answer is I should have been going a little bit faster 2 months ago, I'll go a little faster 2 months from now and we'll be just fine. But in our segment, there's a lot of bad behavior, and the fact that those companies that should have gone bankrupt got bailed out and are out there today with pristine balance sheets. What about the management teams and the teams that didn't run companies into bankruptcy, right? It's crazy. But that's what's upside down in our system. And for those of you studying markets, I wish I could turn the clock back 25 plus years and have the discussion about efficient markets. It's what time frame and under what circumstances, because there are serious disconnects. And I stand by my earlier statement. The markets don't work the way they should. They work the way they do. And lying, cheating, and stealing is part of it. That's my view. Did I leave something out? So I think the future's bright, and the challenge, electric cars. So unless somebody can show
We're running
me,
against the reception here, Judy, so we're going
Yeah.
we'll take one on electric cars.
unless somebody can sit down and show me the math to the contrary, it's going to take a long time, right, to displace and offset the energy that is taken for granted, right? That's the math they never do for anybody. So there's a bright future ahead. I think the teams and the people coming into the workforce today, the challenge, I think, for all of them, the challenge for our team, the challenge for all the rest of the teams, you've got to continue to evolve to be the company of tomorrow, right? We can't be the company that we were 5 or 10 years ago, or the company many of us grew up in. And I think that's the challenge, because you've got to continue to eke out efficiencies and gains and be willing to challenge conventional wisdom and approach things in a different way. But I think the future's bright.
There was a significant change in the tax law in December. Not all of that was expected. How has the change in the tax laws, many changes in the tax laws, affected your company?
The effects on us were minimal, mostly because when we started using asset equity to fund our transformation, we sold a lot of assets, and a lot of those assets were overseas. So we bit the bullet and brought that cash back with the tax consequences of the day and reinvested domestically. And then most independent E&Ps have run up balances. I think we've got $1 billion or so of net operating losses. So the impact on us was de minimis in terms of any near-term adjustments. Now, ultimately, over the longer period of time, if the tax rates hold, it'll be positive going into the future. But the impacts of today were minimal. A few $1 million to the positive.
Thank you. And Lee, thank you very much. You've been really forthcoming. You've shared your views with passion, and you've given us some great advice, particularly to a lot of the young MBAs in the audience. So thank you very much for being here, and we look forward to seeing you.
Thank you.